Welcome back to another, podcast that we are putting on. My name is Jason Wood, and along with Lee Maddox and Michael Maddox, we are partners in a nationwide brokerage company. So we have the LOI signed. What is the buyer doing with respect to due diligence? What are the expectations? What do they need to know about?
So in the transactions, that tends to ebb and flow. So if you're working with the seller, there's a flurry of activity to get all the information to do the valuation. There's a flurry of activity to put it on the market. There's a flurry of activity when we get the letter of intent, and everything slows down. So the buyer signs the letter of intent, the seller signs the letter of intent, and now it's time to help the buyer get financing. So brokers will provide buyers with some lender contacts, put the buyer together with the lender, and then start providing the buyer's lender all the information that the lender needs to get the deal financed. So at this point, the buyer won't be doing much other than communicating with the lender to see when they might have an answer on their loan approval. The lender a lot of times will directly communicate with the broker, which is why you as a seller want to have a broker. Otherwise, the lender is going to be calling you 5, 6, 7 times, 8 times a week trying to get information. So, the broker will have a Dropbox with lots of information. The seller will communicate. And even though we may have provided them, they may not have pulled it out of the Dropbox. They may didn't know where to look. We feel like we keep providing the same information over and over again. But, we'll go through it when we get requests from the lender, and then we'll go back to the sellers or seller CPA. And finally, at some point, there'll be enough information delivered to the lender so they can make a decision whether or not they want to do the loan. Once the buyer has loan approval.
Well, let me stop you right there. So one of the things that I think a lot of buyers don't understand is how important the rep is at the bank. And they think, oh, well, it's Bank of America, big deal. I'm gonna walk into a branch and get a dental loan, or it's U.S. Bank. I can just call this person. What I have found is the rep at the bank is extremely important, because you can have a great bank and a really bad rep, and you can also have a great rep and maybe just a mediocre bank. But because the rep is amazing, they can get the deal done. I mean, I've seen great reps be able to reduce interest rates more than their peers. I've seen them be able to get things through that maybe, the buyer's a little light on liquidity, but, they're able to sell it to underwriting, where other reps are like, it's just another person. And so
Yeah, I think you're raising a good point. The buyer should be going to a dental-specific lender, because they understand the marketplace. They understand the default rate's extremely low, like, between 1% and 2%. And if you go to your local bank, they're going to run you to SBA lenders. SBA lenders is it's an onerous process. It's very expensive, very unforgiving loans. When you can go to a dental lender that will lend 100% financing at better rates, understand your business model, and can find a way to get to a yes. And I agree, there are different brokers, bank brokers, whatever you want to call them, that are better at their jobs, that can find a way to facilitate the deal. And I think that that's multifaceted. It's not only information, that's how it's presented, but then there may be an interview, there may be some coaching on how you answer the questions in the interviews. While they can't really coach, they can give you some suggestions, but they have an understanding of what it takes to get the deal done. And they will ask the right questions, right? So lenders will call and ask me questions, and even though I've done a very detailed opinion of value, they may have picked up something with their underwriter that I missed. And so then, okay, the question is, how do we present that back to the underwriter, and in communicating with the bank person, we can get a sense of how serious the information is, and whether or not, look, we're always going to be truthful, but we want to make sure we provide enough information so that the underwriter gets it, right? So, for example, why did revenue drop the last 3 months of the year? It's not like it's that hard to answer. My client had heart surgery, right? So, if the person was out of the office, that's easy. Or my hygienist was on vacation, or we had a flood in the office, or my daughter got married. there can be a lot of reasons to explain drop in revenue, or why did the expenses suddenly go up, or maybe we bought all new servers as a one-time expense. But having a really good rep that is working to get the deal done, and I say that because there was a lender that did a lot of dental transactions, and they were great. And then they got bought out, and then they got bought out again. And then it seemed like every transaction you worked on with them, they were looking for a reason not to do the loan versus a reason to do the loan.
Right.
So I find, the primary banks that we deal with now, you mentioned some of them before, they want to get the deal done. They know the default rate is low. They have very good team members working for them that have been doing it for a long period of time. So I think having a good dental lender with people. And I think you should know that a lot of brokers have relationships with these people, so there's a high level of communication and trust there, and that I think helps facilitate the transaction versus going to the local branch at U.S. Bank or the local branch at B of A or local branch at Citibank, and these people are not used to doing loans for large dollar amounts for dental transactions or medical or optometry or whatever it is you're buying. So getting a healthcare specific dental lender is really important.
Yeah, one of the things I love about being a national company is that we know a lot of the good reps, and we know, like, hey, look, there is in Iowa, there's just not a good rep, and so the bank might be a great bank, but rather than talk to the Iowa person, we want you to talk to the person who is in Wisconsin instead, who's still close enough. And so I've just,
well, I find a lot, it's just about how do you get to the decision maker,
right?
Right.
Exactly.
So if you have a person who's looking at your loan and they're trying to find a reason to say no, you never get to the decision maker. If you're working with somebody and the business model of the bank is to get to yes, and you have a good loan advocate for you working, then the question is, how do we get to yes, and how do we get to the person that can get to yes? And when I was running the Henry Schein division on the West Coast, there were layers up I could go to get things done. And it would be, let me talk to the local person who I think is great, but we're getting roadblocked by somebody. I'm going to go 4 people above that.
Right.
But if I didn't have a good relationship with the bank, I wouldn't be able to climb up to the other people to get that done. And it's the same thing today. We really want to make sure we're working with people that can facilitate the transaction, look for a yes, and find a way to get it done versus try to torpedo to the deal. We don't want to lend the money, which, again, it doesn't make any sense to me, but those particular banks are not in our market anymore. If they're in our market, they almost don't do any business. So
I love how you said advocate, because I don't think that buyers and I guess sellers either, I don't think they view the lender as a quote-unquote advocate. They view it as just a loan. But, I mean, a lot of these lenders, these individuals that we're working with, they're running with these dentists. They're for 5-10 years. They're the point of contact. Hey, I'm expanding. I'm doing this. I'm doing that. So I would say that they look at it differently than, say, maybe Joe Schmo at your local branch. So
yeah, I mean, certainly they're packaging it in a way,
right,
and trying to work with underwriters that they know they can get the deal done through. So there may be different underwriters in a bank, and some of them are no 90% of the time, and some might be yes 90% of the time. A good advocate working for you is going to know where to steer the loan package to try to get it to an underwriter that can get the deal done. And there's three groups of people you deal with in the bank. You got the salespeople who want to get the deal done. You got the underwriter whose job is to analyze everything and decide, is it something we think we can do? And then there's a risk manager that runs the bank who's looking in the back of the room just saying, no,
can I get screwed?
No. So they don't want to expose the bank. They don't want to expose the shareholders. And so we have to put together a package that makes sense. So on the broker side, we try to put together a cohesive package that we think the lenders want. And we can do that by giving them a Dropbox of information or a package, however you want to do it. And then that broker advocate is going to come back to us and say, tighten this up, move this here, there, we need a little bit more information on this, that, and the other. And then once we have that information, then they will submit it when they think that there's a reasonable chance that it's going to get submitted. If they don't think it's going to get submitted, your file is going to die right there.
Right.
But if they think they can get it submitted and all the questions are answered, they're going to go to their underwriter. Once it goes to their underwriter, they're just a different breed. I mean, they see things nobody else does.
Right.
They're going to come back and ask you more questions. And, again, a good advocate will come back and ask you those questions in a way that you understand it and try to get answers. A person who's not an advocate will just move on to another deal, right? Because they have so much business, they need to make the money, they got to move as quickly as they can from one deal to the other. So I agree with that. Having a relationship with people, and the people we work with, I've been working with for 15, 20 years, people you've been working with 15, 20 years.
Right.
We know each other. They know our business ethics. They know the kind of transactions we bring to the table. We don't take every transaction. We don't take anything with the term hair on it. We want super clean, and the banks appreciate that. So going back, I kind of cut you off there on that.
No, you're good.
You were talking about the buyers. And so what the buyers do is tend to work with different banks, and it's very hard for those advocates to create value. So sometimes they move from one banker to the other for a quarter or an eighth of a point, which is frustrating after they've gone, to task for the buyers to get the deal done. But, again, we don't coach them where to go, tell them where to go. That's up to them. So the buyer, during this time period, the buyer is working with the lender to get their personal financial information together. We're working with the lender to get the information from the doctor together, and then the bank is going to make a decision. Once the bank makes the decision, it's go time. And go time means the buyer then should have already lined up their advisory group and now putting them all in action to get the deal done. So the lawyer should be drafting or reviewing. If you have a real estate agent, they should be doing what they're doing. The CPA should be looking at the books and records. An equipment person should come out and start doing their due diligence. The buyer should be working on getting the insurances they need to buy the practice, making sure their malpractice is in place. If they're out of state, making sure their license is going to be activated, that they've taken all the steps to get their license, that they have general commercial liability insurance, all the things they need to work on while they're running their associate job. They got to do all this, so it's a lot of work and it's tough. And the broker's job is to try to, help them, herd them, get them in the right direction. So again, if the buyer will provide us with the loan approval, we can help with that. Sometimes buyers don't want to do that, but if we can see what the conditions are to the loan, we can try to help those buyers go through those conditions and mark them off one by one to get them in a position so the bank can fund.
Yeah. So, I mean, what I do when I'm representing buyers from an attorney standpoint is, they'll get 2-3 different banks looking at the practice. Then we'll get these approvals back. And what a lot of buyers don't understand is the conditions are sometimes even more important than the interest rate or the term, because one bank will be at a 5.2% and another bank will be at a 5.5%. And I'm telling the client to take the 5.5, and they're like, "You're insane. 5.5 is higher than 5.2." And I go, "Okay, but look at the conditions. The conditions of the 5.2 bank have you being required to take life and disability. You have to factor in life and disability per month to figure out what your true interest rate is, as opposed to the 5.5 bank is saying you don't need life and disability. Now, we think you should get it, but you don't have to assign it over to us." And those are things that I think a lot of buyers, if I could counsel every buyer, it would be you need to understand conditions are just as important, if not more important, than the interest rate.
Yeah,
Same thing,
prepayment penalties.
Yeah, all that stuff.
Rent requirements, covenant not to compete radius requirements, all of those things. I agree. And I think if the buyer will share that information with the broker, the broker, even though the broker is representing the seller, can try to help you stay on track. A lot of brokers will have relationships with some of the malpractice carriers who can put you in touch with the malpractice carriers or equipment inspectors, all these types of things to try to help out. You can also do it all on your own, but generally there's some assistance out there. So that's what the buyer is doing during that time while they're keeping their day job, working as an associate. They are getting everything ready to take over the transition of the practice. And the buyer and the seller on the other side will be working on the purchase and sale agreement and getting that ready. Once that's done, hands it off to the buyer, and the buyer will be working with their attorney on that. The buyer and seller should then be working on the letter of introduction and working on that together, and then planning for the transition. So transition means the buyer needs to give notice, right? So maybe they need to have somebody look at their employment contract. Depending on the state, is it as is? Is it, is an as is contract where they can terminate at will contract when they can terminate anytime they want? Do they have to give 30 days notice, 60 days notice? Is there a penalty if they quit early? Did they have a relocation clause that they paid money for them to move from one state to another that they're going to have to refund if they don't stay a certain period of time? So I think in advance, the buyers, and that would be, by the way, buyers, a really good idea to have your employment agreement reviewed before you start the process and not when you're knee deep in a transaction or neck deep in a transaction. So those are the kind of things the buyer is going to be working on. And good.
When would you, so when you represent a buyer on the legal side, because I know you do that a lot as well, when do you tell the buyer to give notice? Let's say they have a 60-day notice time period. When would you, representing the buyer, tell the buyer to give notice?
I don't have my buyer giving notice until at least we have loan approval. I mean, we got to know that we can get the deal financed. I think if we can get the deal financed, there's a better than 90% chance the transactions are going to go through unless we find fraud, misrepresentation, or it just doesn't cash flow. Something was missed in the initial due diligence.
So I say, when we've gone through one round of negotiations, so one round of negotiations on the APA, one round of negotiations on the lease, because then you've whittled down a lot of the issues.
And you're saying that's happening after loan approval?
Typically. Because loan approval, again, I try not to spend people's money until like the due diligence time period is done, and then I go full tilt. I'm like really quick. But once I get back revisions from seller's attorney, if I'm representing the buyer, once I get revisions back from the landlord, I see, okay, we've got 2 major issues still that we need to deal with, but 90% we're good with. Go back to the buyer. Hey, based upon what I'm seeing, here are the issues. I do believe that we can still negotiate some of these out. If we're not able to get, 1 or 2 of these major issues, are you still comfortable moving forward? Here are the issues. Here are the parameters. Here's how it can harm you. And if at that time they're like, I could still go forward, then I'm like, put in your notice then. Yeah. But the worst thing you can do is notify the other side that you put your notice in, because then you lose all negotiation. So,
well, you got to do something because you're now delaying the transaction.
I don't have to tell you what our notice time period and everything else is when you represent the seller.
You're going to delay the transaction.
I'm not going to delay.
I'm
going to respectfully request, hey, by the way, I forgot. My client didn't realize there was a 60-day notice. We've got everything done. Do you mind?
See that eye roll from me?
Yeah, seriously. Well, otherwise, the buyer is in jeopardy. If the deal doesn't go forward, they lose their job. They've already put in their notice. Or, for instance, I had a deal in North Carolina. Seller was moving from Georgia. We were negotiating. We were doing all these things. $3 million deal. And she made the mistake of saying she moved, that she was now, in North Carolina. Boom. Everything changed in negotiations. Everything was suddenly a no. And it actually ended up, the deal didn't go forward because we had some major issues. Like, because it was a bigger deal, in order to get the deal done, we needed a seller carry back for a certain part of the loan, which they had already agreed to. But now all of a sudden we're not agreeing to that anymore. So for me, it's an issue of negotiating power, but also a protection of the deal. Even though it might not seem like a protection of the deal from the seller's side.
We're just back to the timing issue stuff, right? So the buyer signs a letter of intent. You didn't see it. There's a broker in California that has a 21-day due diligence period. 21 days.
Yes.
They don't even have loan approval in 21 days. So they get loan approval at day 20, day 22, day 23. And now the broker, who has probably the worst asset purchase agreement I've ever seen, sends out his asset purchase agreement and expects the deal to close in 5 minutes. And then you come back and say, I need to delay the deal 30 days or 60 days because I have a job.
But I do it really nicely. I said, hey, by the way, I apologize. I totally screwed this one up. We've got everything else, but we just provided notice. It's 30 days.
Michael, we have this right now, right? I mean, we pushed the deal, but we're in the deal 3 months, and the buyer came back and said, I haven't given notice yet.
Well, 3 months is too long. That's too long. Did I mention I was quick?
So okay.
What do they call me? White lightning?
So the question is why is it 3 months? And I think you said it earlier. Your buyers are looking at 3 lenders at one time. This particular buyer only wanted to go to one lender.
Oh, geez.
Who took 3 weeks or 4 weeks, then to another lender 3 to 4 weeks.
No.
Yeah, and now we're at a third lender. Now we have the deal approved. So again, if you decline,
sounds like picking their advisors is extremely important, is what you're saying.
Absolutely. And getting declined at one lender doesn't mean that the deal doesn't go through. It just doesn't meet their risk tolerance. There used to be a guy running a bank, and he used to throttle it. He would play with the interest rates. He would approve deals, not approve deals to control the flow in the business. And you would hope to catch him on a streak when he wanted to get a lot of deals done. But you would also sometimes catch him on a streak where he didn't care so much, and all the deals would get declined. And so you don't really know what's going on in the banks and what economic pressures is up against, or where there might be a super executive looking down trying to monitor everything, so they get really rigid in what they're doing. Who knows what they're doing? But if you put out your loan application to 4 or 5 banks, and all 5 banks say no, then there's something wrong with either your financials or the sellers or the practice. But it doesn't happen if a broker's analyzed the deal and done a proper opinion of value or evaluation, and it cash flows on the seller side, unless there's some really red flags on the buyer side, it'll get approved. It's just depending on which bank will want to do it. And different banks have different parameters on how they calculate their debt coverage ratio to figure that out. So again, back to this giving notice thing, that's a good point. I guess what's happening is the conversation's happening before it gets to me, right? So the letter of intent was signed. The buyer has met with the broker. The buyer is saying, I need to close in 60 days because I need to give notice, and I'm going to give my notice now. So by the time they come to me, notice has been given. They either get declined.
When you represent the buyer, you mean?
When I'm representing the buyer. Yeah. And so now they're stressed out because the transaction's gone long, because they got a late loan approval and they're hiring counsel late. And then they're saying, well, I haven't worked in 30 days. I haven't worked in 60. You got to get this done. I got to get this done. And you're right. They lost their leverage. But as long as you have the money, you have some leverage. You don't have to pay. You don't have to do the deal. So, but the answer is good. Is that I don't have a lot of buyers where I'm getting the chance to counsel that because they're not hiring until the LOI has already been signed. And like I said, it's always been a really, I think, uncomfortable situation for me, and it's tough to deal with that. And I agree, I don't want to spend anybody's money until the deal is solid, but it also puts a lot of pressure. If the deal is scheduled to close in 6 weeks, they get loan approval in 3 to 4 weeks, and they want to get everything done in 2 weeks. It's just a tremendous amount of pressure to try to get those transactions done. And we could talk about office lease in another segment, but in this segment, that's a good question about the buyer. So closing dates are important, Jason. As you know, we're trying to pick a closing date. We need to transfer the staff over to the new buyer. We need to transfer patients over. Sellers, please don't go on vacations, plan weddings, these kind of things. When you know you're selling your practice, wait till the practice is sold. But we have a lot of pressure to hit the closing date, and when the closing date moves, unlike a piece of real estate, it's a big deal. And I think that having the closing date move because the buyer suddenly says I got to wait 30 or 60 days is a very big annoyance for most sellers. And I, as a broker, would feel badly going back to my client saying, I'm sorry, I didn't know that they needed to give their notice, because honestly, the sellers expect us to know, what the pulse of the transaction is, and if we reasonably are going to hit our closing date.
Yeah, I think that's why I take, with a smile on my face, I say, I'm totally sorry. I totally screwed this up. I just told my client to put in notice now that we're close to the deal being done.
You're going to edit that out.
So
if that stays in, he's a brave man.
Anyways, for me, it's a because some of my clients have been burned by saying I gave my notice, or I
Yeah, but
moved,
the
or I
seller,
did
but
this,
the
or I did
seller
that.
can carry them. I mean, the seller can work back as an associate, like a rent back in a house. Seller can work for 30 or 60 days while the buyer
Now
is.
you're opening up a more can of worms. Okay, so now he's not there for 2 months, or she's
Well,
not there for 2 months.
That's all right. Nobody will know the practice is sold.
True, but some things happen too. As
That's true.
I'm sure we can talk horror stories on that as well.
Yeah. So that's a good question, folks. So do we? I think that once you have loan approval and you've completed your due diligence, so you haven't identified any red flags, I think it's pretty safe to give your your notice. But going back to a prior podcast, if you have a non-binding letter of intent, anytime in the transaction, the seller can pull the rug and pull the deal on you. So if you have moved, if you quit your job, and the seller backs out of the transaction, there's a chance you may have quit your job and not actually end up with the practice. I will say this, that doesn't happen very much. Sellers get emotionally committed, and I'd say emotionally fatigued during the process. They want to get it done. Most sellers don't go another direction late in the transaction. It's very rare. It would have to be a ridiculous offer, way over asking to make that happen. So I think we kind of covered the buyer thing, what to look at in a letter of intent. We haven't really got into the details of a purchase and sale agreement, but that could be another podcast. But just what's going on during the due diligence, the buyer is going to work with the broker and their team of advisors and people to go in and do their due diligence on the financials, get loan approval, do equipment inspection, and really do a good job of analyzing the practice, having a CPA look at the financials. And at the same time, or as soon as that due diligence is complete, start working and get insurance company, make sure their license is in place, and making life plans, to your point, making life plans to be ready to transition the practice, which could be moving, which means quitting jobs, opening bank accounts, those types of things to move forward.
If you have any other questions, feel free to click the link below, and hopefully we can assist you in that process.